we have inside knowledge into, things, very important financial criteria like rents and expenses, and you essentially have a bit of a leg up.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Denise Piazza. Denise, how are you doing today?
I'm doing great. How are you?
I'm doing awesome. Super excited to be diving in with you. A little bit about Denise. She began working in the real estate industry over 20 years ago through several tax and accounting engagements with real estate clients while employed at a CPA firm. She's continued to build a network of real estate investors and learn best practices investing through that 20 years of accounting experience. And just fast forward, and I'll let Denise kind of dive into more of the background, but fast forward, now she is the managing partner of One Street Capital, involved in over $200 million in real estate transactions. She's a general partner over 600 units and a limited partner over 1,700 doors. So I'm excited to dive into, because I don't talk with a lot of people that are both. Usually they're one or the other. Maybe they've done a deal or two, but they're usually one or the other. So I'm excited to dive in how, you've raised millions of dollars and you're a partner in both the GP side and the limited side. So super excited to dive in. So Denise, with that said, give our listeners a bit more about your background, and then we'll dive into what you're doing today.
Sure. Sounds good. So thanks for having me. As you sort of touched on in my bio, when I started working in as a CPA at a CPA firm back over 20 years ago, I had a lot of clients with a lot of real estate investments. A lot of my higher net worth clients, I noticed the common denominator across many of them were real estate investments. So at the time, I did not have a lot of liquidity, just starting out. But I made a mental note that was something I wanted to have within my portfolio. And a lot of my clients had real estate businesses. So I just continued to develop relationships with them. And as I continued my path in the accounting and finance world, I started to passively invest in real estate once I was able to build up enough liquidity. And, I would ask my network, how to look out for, certain facets of pro formas that were shown, and, what some of the tells were associated with projections, how you should really look at the team and their track record. And so I did that for over 10 years now of passively investing. And my husband and I, and Todd, I don't know if I mentioned this before, but my husband is also a CPA. So basically I tell everybody that my kids have no chance of being cool.
Yeah. No chance. I was just thinking that. Oh boy.
Right. Yeah, right. They're really screwed. So basically, he and I, we invested in multiple different asset classes as we were kind of getting to know the commercial real estate world. We did single family, we did triple nets, we did commercial retail, and we did multifamily, amongst others, and really took the time to develop more of a passion for multifamily. So within the last year and a half, I decided to be more active in the space. I felt like I had learned some really valuable lessons that I thought would be good to share with my network and other investors. And so, yeah, that's really how I got to where I am today.
Awesome. So what are some of those tells? You said you're looking for certain tells, certain things to make sure these deals are good. Is there any, maybe lean on that a little bit? What are some things you really were looking for and making sure that these are deals you wanted to actually get in put your money into?
Sure. So I would say my biggest lesson that I learned, and especially, coming from a finance and accounting background, I typically, would jump through a presentation and go right to the financial metrics and say, okay, well, what am I going to make? What's my money going to do?
That's an accountant, right?
That's an accountant at heart. And so the reality is, while the projections are important, there's certain risks associated with, different facets of the deal, like the debt, basically your overall capital stack. But really, what I took away from a few experiences was just as important as the financial projections is the team that's executing the deal, because an average team can take, a fantastic deal and, basically run it into the ground, unfortunately. Yeah. And then a fantastic team can take an average deal and really turn it into a home run. So that became something that I learned through investing with some folks that, just have been able to ride out, the compression in the market. And being in a really hot market, it's easy for folks without a financial background to not necessarily see that, NOI went down during the time they held the asset, and, they never were able to meet their projections or their budget. And, they weren't really managing the asset. They were just growing their portfolio. And this is, again, across multiple assets classes, so not just multifamily. So I looked at it as though, the real takeaway that I had was it's not just about the actual, pro forma, the projections. It's also about the team as well.
Yeah. Yeah. It's so easy sometimes too to make projections look right. And it's good being an accountant that you can really probably dive into those, but 100%, you're right. I mean, that team is so important. A pro forma is just a guess. It's an educated guess, really. Right. And so it's your job as an operator to try to make sure that guess comes true, or better than that guess.
Yes.
But if you don't have the right teams and systems in place, how can you do that?
Right.
Have you been a part of any deals that went bad? And if so, can we dive in a little bit?
Sure. Yeah, I have. I mean, I have luckily never lost money on a deal. But, there was a deal that we invested in that, the first and foremost, to me, this is going bad, even if it's a home run deal. The communication was awful. I might be.
What's awful? What do you mean by that? Because a lot of people listening here want to either are GPs, want to be GP, or sure, are LPs or want to be LPs.
Sure, absolutely. So they sent monthly reports, and for the first 6 months of holding the asset, all it was a listing of all of the, basically a rent roll, and just with notes, scribbled next to the rent roll and things that were going on, and no summary of, here's the story, here's what's happening. We just took over the asset. We're, in the process of collecting money from tenants. We're turning over the tenant base. There's a lot of renovations taking place. There was no overall summary of here's what's going on. There was a few financial reports attached to it. And as an accountant, even with my background, I had no idea what these reports were. It wasn't a cash flow statement. It wasn't a balance sheet. It wasn't an income statement. It was just a few reports that they had clearly just, pulled together. Sure. And then this, rent roll that they had attached. And so I was really frustrated, and I started, trying to communicate with them and say, listen, hey, this is, I don't know, the 10th deal that I've invested in, and here's some thoughts. I was almost trying to consult for them, sure, just to say, listen, I put together presentations for people all the time, and here's what you have to do. You have to get to a so what of what you're trying to tell your audience, whatever it might be. And so that off the bat really, left a bad taste in my mouth, because it continued on. And it was quite obvious that, that operator was just concerned about getting the property, expanding their portfolio. And they had a presence in the area, but they were not, as, as focused on, getting their team to execute, the way that they had promised their investors.
Sure.
So yeah, that was one where, again, we didn't lose money, luckily, but the market essentially bailed them out. And, it was a very large property. So it was, over 500 units. So it was in a somewhat desirable market. So it was able, again, the cap rate compression, just the overall how hot the market was, they were able to get bailed out. But, when it comes down to it, the combination of poor communication and inability to execute their business plan. I mean, basically the person they sold it to is just going to go in and execute the plan that they originally intended to, but just weren't able to.
Yeah.
So
it sounds like maybe just they're trying to expand too fast, not focusing on the operations of the property,
right.
just going, and that, that's a lot of what we talk about on this podcast. And a lot of the reason kind of why I wanted to do this podcast is there's so many people out there that just focus on buying real estate and getting a deal done, but they don't focus or think about the business and how to operate an effective and efficient business.
Mm-hmm.
So, with that said, what are you guys doing now that you're on the GP side? What are you doing to make sure you're not making some of those mistakes? How are you looking at your business and your growth on the GP side?
Sure. Well, we are working in markets with partners that have a presence already in that market, and it allows us to feel very comfortable that we have inside knowledge into, things, very important financial criteria like rents and expenses. And you essentially have a bit of a leg up if you're within a market already, right? Because first of all, 80 to 85% of trades go to, folks that already have a presence within that market.
Mm-hmm.
And then you have better insight to what your budget should be and what your return metrics will hopefully look like. And you have contractors, if you're doing a value add play, you already have the contractors in place, you have relationships with them, or you're vertically integrated, whatever it may be, we're making sure that we have that strategic advantage within deals that we're investing in, and then that we're bringing our investors into. And then additionally, we are first and foremost, thing that we care the most about is our transparency and our communication with our investors. So at the end of the day, you want to make sure that you're working with people that are in this for the long run, and that, they want to treat their investors, fairly and with full transparency. And at the earliest indication that there's any sort of, alteration in the plan or any sort of issue arises, that you're communicating that to your investors timely, and that you're giving them concise, just information, so that they can, as someone who's not in the day-to-day of this business, which is, as you alluded to, these are just as though you're buying businesses, not just apartments. You're buying a business every time you acquire a property. So you have to give them insight into that business that's valuable, that they can relate to, not just numbers on a piece of paper, because at the end of the day, obviously not everyone is an accountant or a finance person, and they need to know the so what of what's going on with the property.
Mm-hmm.
I mean, I think that's just something so simple is something that so many people struggle with. And so that's something that I make sure we are hyper-focused on providing to our investors. And then also, just the most important thing to me is the team, and just the ability to manage the asset and who is watching expenses, because, the return on your expense reduction, as opposed to, there's a much higher margin associated to a return on an expense reduction than there is in adding, increasing your rents. So you want somebody who's hyper-focused on operating the property efficiently, but also, ability to really find those opportunities for, reducing expenses as well.
Yeah, that communication aspect is so important. I think it surprisingly is glossed over, I think, by a lot of people. I've had quite a few investors that invest in multiple different deals and tell me we're great at communicating. I actually think we're probably pretty bad at communicating. I think we should do a better job at it. And we're always trying to work at doing a better job at it.
Sure.
So it's amazing when I think, hey, we're not doing a good enough job, we should do better, that other people are doing worse. And
Right.
and I think, to me, and there's no statistical data probably to back this up. Maybe there is, I just haven't seen it. But my guess would be is if you take your investors and they invest in a deal where you do a bad job communicating, but you make them a good amount of money, and then you get another company that does a great job, super transparent, but doesn't make very good money, I'm guessing they're going to invest with that second company. They're going to invest with a
100%.
company that made them less money, but were way more open on
Yeah.
communication.
Yeah. I mean, they understand what's going on and they're not worried about their investment.
Yeah.
They know where they stand. They know where, they know they can have faith in the team that they invested in.
Mm-hmm. So you said the most important thing is the team, and I definitely can't argue with that. What's the process you use for finding good teams? What are you looking for? What's the process?
I look for particularly somebody that has, all the different, that basically there's a different skill set represented that, is needed for every facet of running a business. So you need to make sure that you have somebody that's going to, basically be there to run the asset, be the asset manager. Need somebody to handle and fully understand capital stacks and investors and raising private equity and debt and securing the right debt tools. And then also, another key thing that I've noticed with the people that are scaling is, are they continuing to hire as they scale their business? So, somebody might be a great asset manager when they're managing, I'll just say, 300 units.
Yeah.
But if they scaled from 300 to 1,700 units, how many asset managers do they have? Because the reality is you can't continue, you can't be in one place at all times, in every place at all times. And, if you're also have a few people that are, or only one or two people that are focused on growing the business, well, they're going to need to continue to grow their business to make money, but they don't have enough staff to continue to run the asset itself. And that leaves everything up to the property manager, who is not invested in the deal. Their money is not invested in the deal. And to me, that's, it's just making sure that people are hiring up as they continue to scale and grow, because it's, if they're especially if they have assets all across the country, right? I mean, it makes it even more difficult because you're not using the same property management team. You just want to make sure that they have the right people in place. So if anything happens to them, or if they're just hyper focused on growing their business, that, your assets being properly taken care of.
Yeah, when your eyes not on the ball, you're gonna miss every time.
Yeah.
It's these property management companies are, there's some of them that are fantastic, but if you're not the one talking with them, or somebody on your team is not talking with them, and quite frankly, how do you expect them to comply to your vision if they don't know what your vision is?
Right.
And so
Absolutely.
you need to constantly be, you are, as a business owner, you're the leader, and you have to have the right people in place in order to lead the property management company, in order to lead the contractors and so on. If you don't have those people in place, or if it's not the people in place, and you can't, you have to expect bad results.
Right. Absolutely.
What's a mistake that you've made, whether it be on the passive side, whether it be on the active side, whether it be just something else? What's a mistake that you've made in the business, and how have you learned from it?
Yeah, I would say a mistake that I made in the on the passive side is really jumping in too quickly. Take the time to get to know what you're investing in. I mean, there are great consistent returns with real estate, when you're invested in the right market, you're invested in with the right people. But, take your time and get to know what you're doing and the asset class that you're investing in and what you should be on the lookout for. What the average, is it more of a cash flow asset that you're investing in, or is it more a hybrid between where you're going to get decent cash flow, but you'll also get a lot of appreciation, and know everything, that's beneficial for you to feel comfortable that you're placing your money in the right area. So take your time, really. Is it, in all reality, at the end of the day, it should be a decision that you're extremely comfortable with. And I always tell people, I never want them to invest before they're comfortable, jumping into a deal, because I just don't want them to go in with that mindset. Mm-hmm. It's not beneficial for anyone. So I want them to have done their research, or for me to have at least feel like I've given them enough information where they feel good about it. So I think the number one thing is educate yourself before you jump in. And again, that's something that early on, when we first started investing, I just knew, okay, I love the tax benefits associated with real estate. I love that this is, something that you can use to take tax-free money and, reinvest it into other assets. Like I just love that concept. And a lot of people, don't realize that, as opposed to, when you get your W-2 money and it's taxed at a pretty hefty percentage. So yep. I love the benefits associated with it, but it's really also important to know about the specific asset class that you're investing in.
Love it. What are some habits that you have that you feel like maybe lead to some of your success?
I would say I'm extremely disciplined. I grew up with a father who was a school teacher, so I was not allowed out of the house before, especially when he was on summer break, before I did, I had to, I was a basketball player. So I had to do an hour worth of shooting, an hour worth of dribbling in our garage. And then I had to do reading comprehension and math. And so I think he really laid the groundwork for me to have the discipline and the focus to, to be very passionate about things that I am invested in and working on. And that has, led to tremendous success for me. The reality is, if you want to do great at anything, you got to put in the work. I mean, it all comes down to, you have to put in the work. And I am able to do that, I think, because of my discipline, so I start my day with a workout, and, then I jump right in to, I do some mindset things, and then I jump right in and I do my most complicated tasks early on in the day, because I know, for me, that's when I have the most brain power. But, at the end of the day, it all comes down to, putting in the work. So yeah, I think that's probably my strongest habit, is just my discipline. And then another one, I think I've developed over the years, and just being a finance and accounting person, you have to break things down to people so that they understand the so what of what you're trying to tell them, right? So you have to be able to take complicated topics that people don't normally care about, like depreciation, like, so what, and then explain it to them in a way that they can wrap their head around and understand the benefits. So if you can do that, I think it's a very powerful tool, because it's taking something that people don't necessarily want to learn about or care to learn about, but you're, putting in their face, well, you should know about this, because this is why it will benefit you and help you grow your wealth.
I think along that lines with breaking it down, and I love that you said that, because it's so easy, especially as like you're in this business for so long, and like, I just kind of like forget that you forget where you came from, right? You forget, like, sometimes you're like, oh, everybody knows about this.
Right.
That's the other thing along with breaking it down. Like, don't assume people know.
Mm-hmm. Yeah.
You have to assume, like, people don't know about the depreciate. They don't know about the
Right.
tax benefits because they've
Right.
never heard about it.
Right.
And then if you start speaking in CPA talk,
Hmm.
forget it. You're going to lose them. Then they don't, not only do they don't know, but they don't want to know about it because you're talking over them. So yeah,
Right.
you're right. You just got to break it down, make it simple, make it super easy, and just
Yeah.
don't assume that they know it.
Absolutely. Some of the most successful people out there don't know about it, and they don't need to, for their day to day.
Yeah.
And so it's understanding, really, at the end of the day, that a small percentage of the population, even though, as you said, Todd, we've been in this business for so long, and you've been investing for so long, but not everyone knows how or why people do it.
Yep.
Only 1 to 2% of the population really knows about real estate syndications. So it's something that you do have to just remind yourself. Not everybody knows the background.
Yeah. I sometimes assume everybody knows about syndications, but like, it wasn't that long ago. I didn't know what a syndication was,
Yeah, exactly.
and now you're
Yeah,
like, oh, it's all over social media,
right,
all over podcasts, all that kind of stuff. Yeah,
right.
more people probably know about it now, right?
Sure,
But they
sure.
still, that's a very small portion of people that know
Absolutely,
about it. So
absolutely.
I love
And
that.
we use that knowledge to really, the fact that not as many people know about it as we think they do, to target our avatar, like of who
Yeah.
we try to reach in terms of investors, because
Well,
uh,
that's what I wanted to dive into actually,
yeah,
is your kind of how you guys are raising capital. What are you doing? Because I always find it interesting who people are, what their strategy is, who are you raising from, and how are you going about it?
sure. So, as I said, having a network of people that already invest in real estate and know the benefit associated with it, it certainly helps. Knowing, so my husband has a practice. He has several clients that, have already invested in real estate, that he does their tax work. And again, we've developed that network over years, and people already have the know, like, and trust relationship with us. They know the benefits of real estate. I'm very selective and conservative in terms of the deals that I participate in. And so I think they look at it as though, well, you already have that level of trust, which is so
Mm-hmm.
important.
Yeah.
And then really, when we're targeting people that, we want to work with, and we want to, grow our investor base, we actually niche down to people that have sold their businesses,
Mm.
more recently, especially in
Yeah.
2020. We have a lot of people that we work with that sold businesses in 2020, when valuations were kind of crazy, and, the market was going all over the place. So I think, those types of people, they spent either their entire career or a significant portion of their career building their business with their head down, focused on building that business. They aren't necessarily out there, taking the time to have more control over their investments. They probably, have a lot in the market, or a lot in their 401k, or whatever it might be. So I think those are the types of people that have the liquidity, they have the wealth, they understand how real estate investing is going to help the velocity of their money and help them diversify.
Yeah.
So those are the types of people that we actually target. And, we've been, pretty successful so far in reaching that group. And the other group is really just, along the lines of people that I can relate to all day, every day, is just very busy W-2, professionals, working their way up the ranks of their organization. Again, heads down, so focused on, working their way up, doing whatever it takes. And again, typically the same type of portfolio, a lot heavily invested in the market, maybe a few real estate investments, but nothing major. And, really educating them about what it means.
Yeah. Yeah, I think it's important to know what your niche is, and that's a great niche. People that sold their businesses. We have been working a lot more with people that have just sold their real estate. They own duplexes, fourplexes, 20-unit buildings, that type of stuff. Mostly smaller apartment buildings, and they want to get onto the passive side. They're likely older.
Mhm.
We've been working a lot with with those types of people who are looking, okay, where do I place my money now that I sold this building? So just figuring out what works for you. I've got a really good friend who used to be a doctor. Well, who do you think
Hmm.
his target audience is? Of course,
Right.
right?
Right.
So knowing who you're raising from is just going to absolutely help you be able to just do a much better job serving that particular market.
Yes, exactly. And one thing that we always strive to do is give away and not so much information, before we, ask them to invest with us or, place their
Yeah.
trust in us,
Yeah.
give them as much free knowledge as possible. So,
Love it.
how I like to differentiate myself is I will say, look, even if you're investing in a deal that's not mine, I'm happy to take a look at it with
Yeah.
you
Love it.
and walk through it. Like I'm happy to do that. Like I want, the best for everybody. I tell them about deals that I'm just passively investing in because I'm coming from an abundance mindset. And I think if you show people that you're going to add value to them, I think that they'll realize, in good time that it's you're gonna come with an opportunity that you vetted that makes sense, that is a good opportunity for them. So yeah, I think that's important too. Just continue to give away as much value as you can and don't necessarily have an expectation in return.
Yeah, that's the most important part about that, right? Is don't have the expectation in
Yeah,
return. If it comes
exactly.
back, great. If it
Right.
doesn't, that's fine too.
Yeah.
But no, I
It
love
makes
that
it
mindset.
makes it exciting going into every opportunity,
Yeah,
thinking like, maybe this will come back, maybe it won't, but
yeah. Oh, love that. Great mindset. Denise, this has been a lot of fun. I want to ask a couple more questions before we wrap up. Before I get to kind of my final couple questions, though, I want to know what you guys are doing in today's market. Today's market is crazy. What's funny is I've said that since 2017, since I started this podcast. We have had these types of conversations. It feels a little different now, but it's felt different before. What are you guys doing in today's market? How are you looking at the market? Are you actively buying? Are you pencils down? Where are you at?
Trying to actively buy in the right market where, taking into account things like the affordability issues that we have across the country right now. Are we in states that are landlord friendly, and making sure that we're not tenant friendly, too many tenant friendly states? Because, just again, to the point of the affordability crisis, inflation, the lack of housing available. I want to make sure that we're not, exposed to potential issues like we ran into during COVID, right? Of the
Yep.
eviction moratorium or any sort of
Yep.
issues where we're not able to evict or, increase rents where we were projecting to increase rents. So we're looking at things like that. Obviously debt is a huge factor right now,
Mhm.
trying our hardest to make fixed rate debt work
Yeah.
without prepayment, without killing it with prepayment penalties. And then, balancing that and then obviously anytime there's floating debt, making sure that we are using an interest rate cap and then conservatively, obviously not factoring in a refinance, because we just don't know where
You
we
don't
like
know.
to think we know where the market will be, but the
Yeah.
reality is we don't.
Yeah.
So those are some of the things. But I would say, right now the market to me is the most important because I just want to make sure the back to the fundamentals of the population growth, the job growth, the wage growth, making sure that they're all there because if anything happens with the market, I want to make sure we're in the right area.
Yeah, and those are all sound principles for any market. I could have asked
Hmm.
you that same question in 2017. I could have asked you that same question. I could ask you that same question in 2024, and the answer will basically be the same, right? So that's a pretty sound answer. And this is, by the way, listeners, if you're listening to this some random time into the future, this is June, what is it, 30th of
Yeah.
2022. So obviously, your your thought on the market could change drastically in a month or two or six or in 2 years. But yeah, I think just smart, sound business practices, regardless of what's happening in the market.
Sure.
So love it. All right. So last couple questions. What's a favorite book that you can pass on to our listeners?
Sure. One of my favorite, most recent reads is called The One Thing.
Love that.
And no matter where you are, what you're working on in your life, whether it be business or personally, it talks a lot about if you're trying to be successful in something, it's just back to the basics of focusing on it, and excelling at that one thing that you know that you just have that inherent tendency to want to do, and just being hyper focused. And I talked a lot about discipline before, and using a combination of hard work but smart work to focus on that one thing. So that's been one that's been really helpful for me, because as you know, sometimes with this business, it's hard not to get distracted with right. There's several different roles in the business. And so, I know what my one thing is in my role in my business, and that's what I'm focused on.
Love it. Love it. That's so important. All right. Last question. What are your 3 pillars of wealth creation?
My 3 pillars of wealth creation. The first one, I would say I would anchor it to something that when I first started in public accounting as a CPA, one of the partners said to me that was completely changed my framework, which was, it's not about what you make, it's about what you keep. And so I think coming to your investing portfolio, how you value your time, it's so important to understand, first of all, the tax benefits to everything, and how wealth, to me, again, this goes back to, Robert Kiyosaki saying, but it all comes down to, taxes and debt, and that's how people grow their wealth. Yep. So think about in your investments, in your time, your W-2 position, or whatever you might be working on. Think about, how much you keep associated with that money. And then the second one for me, another really big component to my life is being able to give back. So my why associated with, my business is that I do not right now have the time freedom to work with a lot of organizations that I, basically, donate to and support, provide support financially. But what I eventually would like to do once I have more of that time and time flexibility is to devote my time to volunteering. And so, I have a lot of, really great influences in my life who have exposed me to a lot of great organizations that we feel passionate about. And that we are able to have fundraisers for and things like that. But again, not a whole lot of time to devote to. So that's another pillar of wealth for me is, how good it makes you feel to give back to people. I think that's honestly the greatest pillar of wealth. And then lastly, I would just say trading, not trading your time for money, and doing what you love and what you're passionate about, and getting back to that one thing concept. For me, I don't look at what I do on a day-to-day basis as a job, because I am just extremely passionate about it, and I am hyper-focused on it, and get to do what I love. So I think it's pretty great.
Yeah, isn't it fun at the end of the day when you worked all day, but you don't feel like you worked at all?
Exactly. Yep.
You're like, what else would I have done today? Nope, I did everything I would. Well, yeah.
Right. Right.
Love it.
Yes.
Love it. Well, Denise, look, really appreciate it. Appreciate your time. This has been a lot of fun, and I know our listeners have got a ton of value out of it. How can they reach out to you? How can they learn more about what you're doing?
Sure. They can reach me. My website is onestreetcapital.com, no S in the street. Or you can feel free to email me. It's just Denise, DENISE at onestreetcapital.com.
Perfect. Awesome. Again, Denise, really appreciate it. Thanks a lot for joining us, and you have a fantastic rest of the day.
Thank you. You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.